Hello traders, Gary Wagner here just after 12 noon in Honolulu, 6 o'clock in New York. It is Thursday, 5th day of April, 2018, and this is the Daily Report for Gold and Silver. A stronger dollar put pressure on gold pricing today, with gold closing off about $7 from yesterday's fix at $1330.70. We were stopped out of our current trade. We will discuss that as we pull up our technical studies. Silver bucking the trend actually closed higher by about 11 cents at $1637, with the dollar trading up about 33 points at 9011. Third day in a row for a higher price U.S. equities market. Dow Jones Industrial Average gaining a couple hundred points, closing at 24,505, and lower prices modestly in Bitcoin futures, 67.75 and 67.60 in the CME and CBOE futures exchanges. Gold prices were substantially lower today, losing approximately $10.50 on the day, currently fixed at $1329.70, basis the June COMEX contract. It was the fears of an all-out-and-out trade war that took gold pricing above $1352 in overseas trading. However, those gains could not be sustained. The market closed dramatically off of those highs yesterday and then continued to sell off in today's trading. Most important is the fact that gold pricing closed below its 50-day moving average, which brings us to our current trade, and I am sorry to report that we were stopped out when market forces took gold pricing below $1330, which was effectively where we had placed our stop. The question now becomes, with the market under pressure below the 50-day moving average, at what point could we look for potential support to re-enter the market? To aid us in determining current support levels, we are going to utilize a Fibonacci retracement of two distinct time cycles. The first time cycle is our long retracement, which begins at 1240 and ends at 1365, the first occasion of this double top at 1365. The second fib retracement will just account for the most recent rally, which began mid-March, in which gold ran from about 1306 up to 1356. And what we want to look for is something we simply call Fibonacci harmonics, and that is a price point where both data sets conclude a particular price point. And we get that roughly at 1317. The harmonics is created as a 78% retracement of the short-term moving average and a 38% retracement of the longer-term moving average. Therefore, major support based on our technical studies comes in at around 1317, with minor support coming in at 1325. Now, the low today was 1326. The 61.8% is 1325.90, and that matches up precisely with today's intraday low. If gold continues to trade under pressure, we want to look at 1326 as a possible point in which the selling will terminate. If it continues to trade below that, our target would be 1317. Even with gold's decline in pricing today, silver did close moderately higher by about 11 cents at 1336. And what is most apparent when we look at current pricing is the strong amount of support that comes in roughly at 1610. You can see that based upon these lows that have come in through February and March. At the same time, it must be acknowledged that we are still in a defined and tight trading range with upper level resistance just below $17 and support just above $16 per ounce. And lastly, I do want to take a quick look at Bitcoin futures. Bitcoin futures did close modestly lower, off by about $100 today at $67.60. I still believe there is further potential for more downside, and our target remains $6,000 per ounce, which is the lowest low that Bitcoin futures have traded to since the futures contract began to trade at the end of last year. As we spoke about over the last week or so, it is the exaggerated price moves or price swings that we're witnessing as statements come out from either China or the United States, and tensions are believed to be building or subsiding. And that seems to change day to day. But I do believe that this dispute is far from over. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.